you're about to see today might look, at first glance, like just another AI upgrade. But if you actually understand what's happening underneath, this moment could become the first real advantage that everyday investors have ever had over professional funds. And I'm not exaggerating when I say that. For years, AI has lived in demos, prompts, and shiny tools that looked impressive but didn't actually move money. This is the first time an AI feels like it belongs in the real financial world, where every decision has weight, where a wrong calculation actually hurts, where good decisions pay real dividends. Deep Agent's new finance vertical isn't just a feature or another AI assistant. It's something far bigger. It acts like a team of financial professionals compressed into one system, running faster, cleaner, and more consistently than any group of humans ever could. 7 interconnected units working like an analyst team, a quant desk, a macro strategist, an options trader, a risk manager, and a portfolio analyst, all fused together on the same intelligence. It doesn't just answer questions, it executes plans. It breaks your request into multi-step tasks, pulls real data, checks its own numbers, builds scenarios, predicts movements, and turns everything into a structured report you could bring to a client, a partner, or even to your own investment committee. And the craziest part is that this capability now sits on your screen as if it's casual. The first time you use it, you immediately feel the shift. You ask for something simple like analyzing Bitcoin or screening long-term tech equities. The system doesn't run off to generate a shallow summary. Instead, it pauses, evaluates your intent, and starts by asking you a sequence of clarifying questions. It wants to know what long-term means for you. It wants to understand whether you're looking at a 3 to 5 year horizon, or something in the 5 to 10 range. It asks how aggressive you are, whether you care about specific subsectors, whether you want a deep dive or just an executive summary. It behaves like someone who actually needs context before doing real research. Not like a chatbot trying to guess your intent. Once it has that clarity, it begins a full research workflow that feels shockingly close to institutional-grade analysis. When it analyzes Bitcoin, it doesn't behave like someone scrolling social media opinions. It analyzes on-chain flows, watches whale behavior, identifies liquidity zones, tracks volatility pockets, and evaluates how strong the current trend really is. It treats Bitcoin like a serious market asset rather than a meme or a hype cycle, and that alone already puts individual investors ahead of most people commenting online. When it screens equities, it merges fundamentals, technical patterns, sentiment signals, momentum, news flow, and valuation metrics all at once. Instead of handing you a lazy list of tickers, it gives you specific reasons for each pick, supporting metrics, narrative drivers, and the key risks. It's the kind of screening that normally takes analysts hours, and even then usually with gaps and blind spots. Here, it's automated, structured, and ready in minutes. And this is where investors actually start saving real money, because every poor screen or misread chart has a cost. AI cuts down on those errors dramatically. Then it zooms out and reads the market in a macro sense. Not the vague inflation is high, rates are rising talk you see everywhere, but actual money rotation. It identifies where capital is flowing this week, what sectors are heating up or cooling down, and whether traders are shifting from growth to value or from risk on to risk off. It watches global indices, volatility behavior, sector rotations, and uses all of that to convert macro talk into actual trade ideas. Instead of a confusing wall of macro noise, you get a clear directional message. Money is moving here. Momentum is building here. These 3 names are positioned to benefit. This is the exact kind of insight that helps investors time entries better and step out before things reverse. Its short-term market mode is even more aggressive. It scans for stocks ready to break out, sectors showing exhaustion, and tickers quietly building risk under the surface. It essentially alerts you before the market makes the big move. Early entries, early exits, early protection. And in trading, early is money, late is loss. Most people lose not because they're dumb, but because they're late. This AI rewires that dynamic dot options traders get something almost unreal. Instead of throwing random strike suggestions, the AI behaves like a senior portfolio manager. It asks what style you prefer, whether you want to pay premium or collect it, your conviction level, your time horizon, your risk appetite. Based on that, it builds an entire option strategy with payoff profiles, expected return, risk exposure, and probabilities. This is the kind of structured thinking people usually need years to develop. Now the model delivers it on demand. Portfolio analysis might be the most serious part. It reads your entire portfolio like a risk manager who never sleeps and never softens the message. It tracks concentration across sectors, asset classes, and factor styles. It flags weak positions, correlated clusters, over-leveraged exposure, and silent risk pockets. It shows exactly where you're vulnerable. And because it's AI, it doesn't hesitate or sugarcoat. It tells you if you're about to make a mistake that could cost you months of returns. And then you have the single stock 90-day forecast. Pick Apple, Amazon, Tesla, Nvidia, it doesn't matter. The system runs fundamentals, technicals, momentum, sentiment, news flow, competitive strength, margin trends, historical pricing behavior, and builds a forward-looking scenario map. It gives direction, probability, key levels, risks, and catalysts. It doesn't waste your time with a museum tour of past charts. It focuses on where the stock could realistically go next and why. When all this analysis is complete, your workspace splits into two. On the right side is the final polished report you can export or share. On the left side is the full chain of thought showing exactly how the agent reached its conclusion. Every metric it checked, every comparison it made, every reason it kept or discarded. You get total transparency and the ability to audit the process. What makes this moment so important is not just the technology, it's what it represents. For decades, institutional investors had access to far better tools than everyday people. Bloomberg terminals, proprietary ML models, massive research teams, and dedicated risk units. Now, something shockingly close to that is landing on the screens of individuals. Faster research, fewer mistakes, earlier opportunities, better risk management, and more consistent decision-making. This is the beginning of a power shift, and it raises a massive question. If AI can replicate the work of entire financial teams and deliver it to individuals instantly, what happens next? Who keeps the advantage? Who loses it? How do markets behave when analysis becomes automated and democratized? And if AI eventually learns to invest fully on its own, do humans slowly get pushed off the trading floor? Tell me what you think in the comments. Make sure you're subscribed, because in the next video, we're diving into the question everyone's quietly worried about. If AI becomes a completely autonomous investor, what role is left for the rest of us? I'll see you there.